Oh yeah, this one for you. You only lose money when you sell your shares due to a price drop. A price drop, that's temporary, so don't worry about that. This is based on news headlines and an analyst's opinion. And we all have opinions. You must trust yourself. And trusting yourself is trusting your instincts. When you invest for passive income, you should be focused on one thing, and that's cash flow. Not the fact that the price dropped that day. Keep buying shares, especially when the price drops, because this means you can buy more shares at a discount price. Thinking about the price is an emotional state. Passive income, that's a business decision, and you are a business. The loss only becomes real when you sell your shares. This is why income investors invest into dividend stocks. Right now, if you invest $304 into IVR at $8.69 per share, that buys you 35 shares. Those shares will start working for you immediately. While taking into account the bigger picture, investing consistently over 10 years could grow your portfolio to over $126,000. This is how you put your money to work for you on a consistent basis. Your annual dividend income could grow to over $5,000 a year. That's about $418 a month, all because you decided to become an owner. This is real money, your money, all from owning shares. Now you see what I mean when I say treat your paycheck like a business. You're not chasing the price of the stock. You're building income. Start small, stay consistent. Let ownership pay you back. I know buying stocks might seem intimidating because you think, hey, you know what? I'm going to buy this stock. What is it really going to do for me? Will I make any money from it? What am I doing? And I get it. I was in that same place where I first started because I was just like, hey, I don't quite understand this, but let me just take what I know from based on the things that I've read and just looking at the stock market. So the first stock that I invested in was IVR, and I didn't quite understand. I knew it was a REIT. I knew that they paid a dividend, but I was like, hey, when will this dividend pay out? Looked at it, researched it and all of that. It came out to being, hey, they're going to pay out every quarter. So I just kept investing. First time I received a dividend check, it was probably about $30 or so. It wasn't a lot of money, but I was like, hey, I made some money. So I just kept repeating. And before I knew it, I got pretty good at it. And that stock was $7, around $7 or $8 when I started investing into it. So, it wasn't a whole lot of money. So I figured, hey, I could take a chance on this. Just investing. Hey, before I knew it, I had 2,000 shares. And now in 2026, that stock is paying out 12 cents per share every month. So they're not paying out quarterly no more. So I receive dividend checks every month. That's game changing. And, if you haven't received a raise, or even if you did receive a raise, that's money being added to your raise. And if you haven't received a raise, then this is a substitute for that. Because this is an extra, say, maybe $100, $200 a month that you can be receiving just from a stock that you invested in. And right now, it'll be a pretty good time to get into a REIT stock. I'm not saying invest in one, but if that's something that you would like to, definitely research it before you invest your money into it. Your stocks will only pay you if you stay in the game. When you quit because things look bad, you stop all passive income from being deposited into your account. When you own dividend stocks, you know you're going to get paid monthly or quarterly. This money doesn't stop just because of the price of the stock goes down. That's part of investing. Now, if the dividend gets cut, yeah, you'll feel that. But overall, as long as you see more green numbers and the dividend checks keep hitting your account, you're in a good place. Long-term investors stay focused on passive income and buying more shares when the stock goes on sale, aka the price drop. When you sell your shares based on news headlines, which cause the price of the stock to go down, you will be stopping all future passive income. You will be stopping the compounding of your investment, and you will be giving away your ownership, which is a big mistake. The stock market rewards patience with consistent cash flow. Emotional selling destroys compounding. Compounding takes time, consistency, and reinvesting your dividends. Your portfolio cannot survive on panic, reaction, or short-term thinking. You have to stay in the game, Continue buying quality companies, reinvesting your dividends. Focus on income growth over price movement. Passive income is about ownership, not headlines. Headlines create fear. Fear creates selling what you work hard for. If the goal is passive income, you should be focused on buying as many shares as you possibly can. Hold your shares and count your dividend checks as they are deposited into your account. When you see the stock price has dropped, that means the shares just went on sale. So buy more shares. The same way you shop at the mall for a sale, you should be shopping for stock shares in the same way. As always, stay consistent, stay focused, and keep building passive income. You are a business.